Welcome to the DeFi podcast, where we discuss all things DeFi. We host in-depth discussions with industry leaders with a focus on the Avalanche ecosystem. The content of this podcast is for informational purposes only. Statements made by hosts or guests reflect their own beliefs and opinions and is not investment advice. The hosts or guests may have personal investments in any assets being discussed.
Welcome to the relaunch episode of the DeFi podcast. Today is a very special episode since we've not been here for some time. Also, due to the fact that we will be introducing our two new co-hosts, Bill and Rhett. Bill is a former market maker and trader from TradFi. He fell down the crypto rabbit hole in 2019 and founded Daybreak Digital, a VC fund focused on Avalanche. Bill also happens to be an advisor to Avant and GoGoPool. Rhett, on the other hand, has a background in machine learning, in trading, and is the founder of Gravita on Ethereum, as well as Avant, an Avalanche native project which will be launching soon. Note that JF and I are now team members at GoGoPool, and JF is also an advisor to Avant as well. We have a lot of participation in Avant here, so this is probably a topic we'll touch on in future episodes. And now, getting to the most important speaker in today's docket, the one and only Eric Kang, who's the head of DeFi at Avalabs. Welcome, Eric.
Hey, Eric.
Thanks for having me, guys.
Yeah, so I think we wanted to start by talking about maybe the current state of DeFi on Avalanche and maybe a little bit of how we got here.
Yeah, for sure. So the Avalanche DeFi ecosystem is obviously the first portion of our chain development that we focused on. Going all the way back to, some people might remember Avalanche Rush, right? Where we launched the Avalanche Ethereum bridge and then immediately followed up with, user incentives. I think DeFi TVL got up to 20 bill, depending on how you want to count it, at its peak. And then we had, after 2021, we had a prolonged bear market of, I think more than 2 years at this point. And it was a tough time, right, for the ecosystem and also just DeFi in general across all chains. So coming out of that bear market, obviously right now we're seeing the market has started to heat up a little bit. We're seeing a lot of the really big native projects, right? Banshee, Trader Joe, Delta Prime have stuck through it. And we're, kind of proud of them, but also we want to bring some energy back to the ecosystem. So it's been a while since we've had a major DeFi protocol launch, I would say, as well. So with this effort that we are currently undertaking with Boost, we're also hoping to bring in some new protocols into the space, whether it's native protocols like Avant or just protocols that have proven themselves in other ecosystems, in other EVM or non-EVM ecosystems, really. So that's kind of the state we're in right now, and a lot of the efforts we're undertaking now are kind of almost like a reaction to everything, right, that's happened in the last 2 years. And we're hoping to, really take the DeFi ecosystem to the next level.
I understand there's a little bit of a focus on bringing RWAs to Avalanche as well. That's been an interesting development, I think, for, during last kind of DeFi summer, there were no RWAs really at all. Now they're kind of picking up in a major way. It seems like one of the more important things to happen over the last 2 years. So yeah, curious how you guys think about that.
So I think there's a very clear intersection between RWAs, the work we do on the institutional side, as well as our DeFi team. I think a lot of the underlying primitives of DeFi will be applied towards these institutional use cases, except obviously with more guardrails like KYC, geofencing, all the things that institutions need to be compliant. And we really view the RW space as one of the largest potential areas of growth across crypto in general, definitely within crypto capital markets. The entire universe of crypto native assets, a couple to 2 trillion right now. If you look, in TradFi, right, each of these markets are many, many times that. So even if we accomplish bringing, 1-2% of all TradFi assets to DeFi, right, that's already probably larger than all the TVL across all chains today combined. So it's an area where we see a lot of potential. I think the hard part is, getting these protocols to actually launch, be regulatory compliant, fulfill the needs of various stakeholders, whether that's banks, whether that's asset managers, and generally just getting them more comfortable in crypto.
2 follow-ups on that. How do you foresee this RWA play sort of mesh with DeFi.
Mm-hmm.
And where do you think Avalanche specifically sort of stands in the blockchain space versus other maybe L1s in terms of capturing RWA appeal?
Yeah. So ideally, that's a great question. And it comes down to like what risk appetite these either asset issuers or institutions participating on chain have, from a compliance standpoint, from a counterparty risk standpoint. I think all of that is considered as they're thinking about deploying. Ideally, they're all issued and traded in open and permissionless DeFi protocols. That would be my ideal outcome, right? And that would really unlock a lot of potential investment ops for people who have not had those opportunities before. But I think the reality is it will be a combination. Like some will be issued in a compliant way on Trader Joe, Faro, Benchy, whatever the DeFi protocol is, and then others will take the primitives we have in DeFi, probably fork a version for their own chain or for their own closed dApp on the C chain and proceed that way. So it'll definitely be a mix, and it just comes down to what these investors are comfortable with.
A couple of things that I've been looking forward to for a little while now. So one, I think Tether's great, but it's interesting that, you have this company that's maybe the most profitable per employee company on earth. They make as much money as Goldman Sachs with fewer than 100 employees. And they do that because, all that Tether is treasuries and bonds under the hood. So I'm pretty excited to see that get more competitive and see more of these stablecoin competitors launch and just pass that yield through to users. We're seeing some of that already, but I think that, to me, that's like a huge thing that's really good for users, and it's a great way for stables to compete. And then the other thing, and you and Eric, you and I have talked about this a little bit, but I've been saying for probably 3 years now that I'm looking forward to a day where instead of using like a Fidelity margin account, that equities traders can just use DeFi lending markets as their margin account. And in a lot of ways, I think that's really interesting in the sense that you're likely to be able to get better terms in a more permissionless way. To me, that's like a huge unlock. So anyway, those are two of the things that I think are just really interesting, very obvious, level ups for people who want to use RWA assets on chain.
Yeah, you bring up a good point. Like whatever is being tokenized has to offer additional features or just be more efficient, right, than the non-tokenized version for it to work. Like it helps that and ideally, right, like I said before, you want to be able to list these assets on permissionless AMMs, lending protocols. But I think the other side to that, and that opens up the door for retail, for whoever else to participate. But the other side to that is institutions, they usually want an additional distribution channel for their assets. So that provides them a wide base, right? But I think more important to that, if they have a closed ecosystem and they're expecting their existing clients to onboard, right, with more steps and, all that it takes, right, to get on chain, I think that's going to be a losing endeavor. And I think it's got to provide more value to justify that investment.
So one of the things that I'm kind of curious about that kind of plays into all of this stuff is the the regulatory compliance factor of this. How is this going to play into the things that are coming to Avalanche, and maybe what kind of benefits could we have that would maybe set Avalanche slightly above some of the other ones? Yeah,
the thing with regulatory compliance, it's a lengthy process. A lot of times it's unclear because there are sometimes no regulations. It's maybe in a gray zone. So the most important thing to do as an ecosystem is to start the conversations early. A lot of times you'll see yourself, even at one company, you'll see yourself interfacing with like 10 different teams trying to figure out this crypto thing. So that's on the private side. And then in a lot of jurisdictions, you inevitably cross paths with the government or some government agency that either oversees crypto or has some jurisdiction over the industry. So where you see this most prevalent, I would say, is in Asia. We've been working with governments in Korea, Singapore, Hong Kong, just name a few, on different types of use cases. What you don't see as much, ironically, is in the US, where it almost becomes like a dance, right? Especially within DeFi, to launch a protocol that won't, be seen in negative light when it comes to regulation. So it just depends, but it's always important to have these conversations early, because usually these are 3 to 5 year cycles, sales cycles. You start with maybe an initial pilot. They take a year to assess the pilot, and then you craft plans to take it to mainnet in a regulatory compliant way. So, and these are like lengthy conversations. But on our side, Morgan would have the best kind of view of all that, I would say.
Eric, can I ask you about something you mentioned earlier, which is, Rush and Boost? So, Avalanche really was put on the map in 2021 with the launch of Avalanche Rush, which, even then the L1 space was kind of crowded, and Rush did a great job of kind of grabbing mind share and market share. And like you said, it got Avalanche TVL up to about 20 billion at the time, depending on how you count it. So can you talk a little bit about what exactly is Boost, which is happening right now? How does it differ from Avalanche Rush? How do you think about it? What are the goals? What exactly is happening under the hood? Like, how long is it going to last? These types of things.
Yeah. One thing to know with Rush, it happened at exactly, I would say, the perfect time, where the crypto markets were going up. There was surplus stimulus just in the general broader markets because of post-COVID, as well as just like firms like Alameda or Three Arrows just going leveraged like crazy. So I think it was a perfect cocktail for it to happen. And obviously there were factors outside of our control, but we try to run a pretty tight ship with regards to the program itself. I will say, you mentioned that there were a lot of L1s back then, but I would argue right now there's probably magnitudes more, L1s and L2s, competing for users, competing for applications. And the first vertical they always start in is DeFi, because of the importance of proper capital markets and on-chain liquidity. So we're in this stretch where we're competing with these different ecosystems. I think with our ecosystem, we've kept it pretty steady, but there hasn't been that many exciting new things happening to draw users away from like NFTs, and then after NFTs, meme coins, right? So this was we felt was the right time, as well as just all the network upgrades coming into the year, which we can talk about as well and later in this podcast. But I would say for us this time around, we're really, step number one, we're really trying to reward our current winners, make sure that the protocols that have found success proven themselves right through multiple cycles, and have stayed on Avalanche, right? That they're able to reap some of those benefits. And we've seen that across Trader Joe, Benchy, a couple other players onboarded so far. And then for us, step number two is also attracting new protocols to Avalanche, and making sure that this ecosystem, right, has a good amount of competition, but it's also robust, and we have all the necessary primitives we need. And then that's all to overall, right, foster just generally more liquidity on chain, more efficient markets as we go into the end of the year.
Gotcha. Okay. And just one follow-up, if you'll allow me, which is, in terms of, okay, I understand this idea that you want to reward the Trader Joe's, the Benkeys, the Yield Yaks of the world, if you guys have incorporated them already. That's awesome. And then you're talking about trying to attract projects to Avalanche. Do you mind if I ask, when you look at the DeFi ecosystem now, if you could choose 1 or 2 or 3 different types of protocols that you would love to see thrive on Avalanche, what would they be? Like, for example, you mentioned meme coins. Obviously, meme coins have been a huge thing in the last 6 months. But some other stuff that have been really exciting is, Athena has been a huge success. Poly Market has seemed to really find product market fit. There's a few other things like it's a bit around restaking, but EtherFi, Pendle is really exciting. Like, there's a lot. So when you look at kind of the DeFi landscape, is there stuff like that you would love to draw to Avalanche?
Yeah, I think all the above, honestly. But things that really excite me personally, and I think we may have a bit of a gap. I would say on-chain derivatives, generally speaking, not only perps, but also options and structured products. I would say anything that makes DeFi easier for users, because when Uniswap and all the OGs first launched, right, it was very simple. You LP into a pool, But nowadays, just taking AMM as an example, with concentrated liquidity, it's much harder for average users. So anything that kind of makes these strategies into vault products, right? And that was really the main innovation for Athena, is that they made it dead easy for people to get involved. And then I would say, generally speaking, anything that brings on users from outside of crypto. So you said prediction markets. I think that's a great venue. SocialFi is something that we're also looking deeply at with Arena and everyone else. And then I think there's some other use cases like sports betting and whatnot that have a lot of adoption in traditional world, but maybe not as much in DeFi, where it just hasn't seen it yet.
Yeah, I was really excited when we attended Consensus in Austin, and the Codebase, the Codebase cohort is like this incubator that Avalanche is running, where they're bringing a bunch of protocols to Avalanche. And there were some really interesting, projects, brand new 0 to 1 type ideas that I would love to see thrive on chain. But then it's like, when I try to put myself in someone like your shoes, it's like, what are you guys doing exactly? Is it more trying to bring existing protocols that have already found success to the chain, completely new ideas that haven't been tried before, balancing the two, focusing on RWAs, which is a different vertical? Like, it's a really interesting position that you're in, because you can kind of spend energy on any of these things. But it's a balance, and you have to kind of decide at what point to spend time on what. It's really fascinating.
Yeah, and we have limited resources like everyone else. We're kind of on our second cycle as well as a chain. So for us, in your first cycle, you kind of take any dApp that wants to launch on the chain and really set them up for success. But I think on your second cycle, once you had an ecosystem, right, at that point it's like, hey, we still have limited resources. How do we prioritize, right? So you bring up a good point. A lot of this is like kind of behind the scenes that people don't realize, and it's like, hey, why didn't I get selected or whatnot, right? With Codebase too, I think the focus for next cohort will also be moving the projects, targeting earlier stage projects even. Like there's certain and one thing that really surprised me, like a lot of the top performing projects that came out of Codebase were probably the earliest projects, like teams that we plucked out of hackathons essentially. So I think we're going to continue that trend with Codebase.
I think Avalanche has had a really unique approach to DeFi and bringing in users with all of the different programs that they've launched. I feel like this is not something you see in a lot of other spaces in crypto. Like there aren't, nobody at Ethereum's going and giving out DeFi incentives for the whole chain to bring in users. Can you talk for a second about how you guys are positioning yourselves to set up all these different programs, sort of the thinking behind the different programs? And I'm also curious, which ones do you think have performed the best, and which ones do you think maybe have not performed as well?
Yeah, that's a good question. I think from a pure planning and operations perspective internally, before we even think about launching the program, right? We always ask ourselves, what are we looking to incentivize? And I don't mean which protocol specifically, but what kind of actions or behaviors, right? And for us, it's pretty clear from our past defense incentive programs as well as Boost that we're trying to incentivize deeper liquidity for the ecosystem. So that's number one, right? Trying to figure out what the goals are, and then you kind of drill down after that to KPIs, to specific metrics that you want to track against. So that's all kind of part of the setup phase. A lot of the work that we do in launching these programs actually is coordinating with various parties. And that's external parties, projects involved, obviously, but also internally, right? There's a lot that needs to get done. I think sometimes we get I see Twitter tweets that are along the lines of, hey, when is, Trader Joe Boost going live? And some of it's hey, we announced, but then there's still a hang up with, the finance invoicing process or something, right? So this is all behind the scenes. So I think with these programs, and with each vertical, right, it's also a little bit different because there's different types of assets, there's different protocols involved. But one big takeaway, at least for me, when you're looking across Rush, you're looking at Multiverse, which is the L1 incentive program for Avalanche. You're looking at Hyperspace, right, which was the NFT trading campaign. if you're so there's two types of incentives. Like you can either have yield incentives where people are providing liquidity. For those, like the big takeaway is like you don't want people holding assets that are too long tail. And I think we saw that a little bit with meme coin rush. We saw that with NFTs, right? I think for Boost that we focused really a lot on AVAX, Bitcoin, stables, assets that will form a firmer fundamental base for DeFi rather than, and there are pools running for different types of ecosystem tokens. Those are important to us. But we've kind of taken the focus off of like things like meme coins, for instance, with this specific campaign. And then there's this covers like most of the incentive programs we're doing. And then you have a whole another section, which is our more trading based incentives, right? Where the main metric might be volume, whether it's NFTs or tokens. And for those programs, those are even hard to design because there's a lot of like considerations of wash trading and other types of behaviors. So for those, we've stayed away for DeFi, but I think eventually, those are more of those will come to the fold too.
So before we move to talking about network upgrades and ACP77 specifically, I thought maybe like I would state sort of my thinking on DeFi on Avalanche and throw the question at the rest of the panel as well. Like curious, Bill, Jared, Rhett, what you think as well. So my sort of thesis is that Avalanche tech hasn't really been fully ready for prime time, right? So like I think the tech is amazing, and I'm glad that we got DeFi started early. But the real unlock is going to be fully functional like app chain, right? Like that's the thesis that I really care about. And I said this on the podcast on the space that we had recently, but just think it's worth mentioning. Once you see a bunch of L1s launching, I think that's what really is going to sort of like lock in with RWAs, and then that's going to lock in with DeFi, and you're going to have a really thriving ecosystem. So I'm glad to see that Avalabs had the foresight of like, okay, we want good DeFi because we want to create the base, we want to create the products, we want to have like a sort of a healthy ecosystem. Then we went into a bear market. It was kind of a lull, and I think the timing of doing Boost now before ACP77 to just start things back up is just this is the apt moment to do this. So yeah, sort of a fan of what's going on right now.
I can jump in here briefly if you guys want, which is it's July of 2024, and I remember the very first Avalanche summit. When was that? That was March of 2022, so a little over 2 years ago. Kind of at the height, right before Luna collapsed. So it was kind of before bear market kind of set in. We were walking around the floor there. We were basically expecting subnets to be imminent at that point. I mean, I remember DFK was about to launch their subnet, or maybe they had launched, or they were about to launch. Same thing with Corbata. And we had the sense that like subnets and permissionless networks are imminent. It's about to happen. I mean, I don't know. Not that someone gave me that impression on purpose. I remember thinking that. And fast forward 2 years, I think we're close, but we're not, Avalanche as an ecosystem is not there yet. All the subnets or L1s that are currently live using Avalanche are permissioned. I think the goal is by the end of the year to have permissionless subnets easy to launch on Avalanche with ACP77, which I think is going to be great. And it's going to be great because, you can see there are all these really talented teams out there that want to launch their own chains, but to lock up, a large amount of AVAX to do that is difficult. So there's these tons of chains that are utilizing Cosmos SDK, for example, where they don't have to hold any Atom or whatever it is, right? They can just launch using the SDK in their own coin. And, it's a little bit different than Avalanche because, I don't want to get into the differences, but it's a bit different. But at least they don't have to have this huge capital injection up front to launch their own chain. So, it's L1 season. Like everyone wants to launch their own chain. So I think Avalanche is well positioned to be able to take advantage of that as long as, we relatively soon make permissionless subnets live. So I'm kind of anticipating that, hoping that by the time the summit happens this year in October, hopefully we're live by then. That's kind of what I'm looking forward to.
I think there's going to be an influx of L1s that is going to mimic the early days of crypto, where there were thousands of these fork chains launching and all these different attempts at just trying to do something. Obviously, not all of them are going to be successful because, even with the best of intentions, not all DeFi protocols are successful, but I think we're going to see an influx of L1s that nobody in this room would anticipate the volume of, personally.
Quick thought on the DeFi angle. So I think a lot of DeFi benefits majorly from composability, like closer composability. And so some of the general purpose stuff I think will remain important. Taking Cosmos as an example, DYDX has gotten really major traction over there. And I think there is something to be said for certain primitives like derivatives platforms can do really well as like an app chain. And then there's some things where it's like kind of like slower composability. There's kind of an in-between for some. But yeah, for DeFi, I think a fair bit of DeFi will still want to live on general purpose. So my guess is that the biggest use case for app chains on the DeFi angle will be these app chains for derivatives specifically.
Yeah, so maybe we can talk about ACP77. Most people who come across it seem to be very pro ACP77. I am as well. I think it's a great thing for the chain. But just curious, Eric, how you think about it in general, and then how you think about it in terms of DeFi and everything else.
Obviously, ACP77 was drafted almost after hearing feedback from the community, but also builders on Avalanche. And Bill, I think you hit the nail on the head earlier. The two main things that I think would sets ACP77 apart over just like, any of the network upgrades we've done in the past, are taking out the 2,000 Avax staking requirement for subnet validator nodes, because that drastically reduces the cost of these subnets. And just for like people who may not be as familiar with the setup, usually when subnets launch on Avalanche, or L1s on Avalanche rather, they launch with anywhere from 8 to 10 validator nodes in a permission way. Eventually they might go permissionless, but that's the initial setup. So you do the math, 2,000 Avax across 10 nodes, that's a fair amount of investment up front that you need. So that was the major pain point when we're talking to institutions. And some institutions, by the way, can't even custody Avax, or can't even have someone custody Avax on their behalf. So we also need to like work around those types of pain points as well. So, and then the second thing, Bill, that you alluded to was around permissionless subnets. Technically, you could spin up a permissionless L1 even before ACP77, but you needed to use an X-chain native asset. And most of the dApps on Avalanche are built on the C-chain. So that's something we're implementing, which is, folks can now use a staking token that's a ERC20 that they've launched on the C-chain or any EVM compatible blockchain. So I think with those two, I think we'll see a pretty big explosion of L1s. And we're not just like sitting as a BD team. We're also not just sitting around, right, waiting for these L1s to kind of come into the door. The team, there's a proper go-to-market attached to this network upgrade, which is something we've never done before. And then there's also going to be, from a BD perspective, we're also actively pitching certain clients that may have not even thought about the need to launch their own chain. So there's a lot going on behind the scenes. We're excited for the end of the year. Our engineers are working on the upgrade. BD and marketing are cranking on the go-to-market, and yeah, it'll be good.
Can I ask one quick follow-up? Well, actually, first I'll just make a quick comment building on what you said, and then a quick question for you, Eric, which is, I talked to Stephen Gates at GoGoPool, one of the two founders of GoGoPool, and this was like in March or whatever. Was it March? No, I'm sorry. This was in Austin, so May. And I told him, like, behind the scenes, how many different groups are you talking to? How many people who want to launch their own chain at the time, their own subnet? And he's like, dude, my calendar is full. Like, it's like dozens and dozens of teams I talk to. Everyone wants to launch their own chain. So I think people are very excited about this idea. I mean, at the time it was, he was talking about it in context of, hey, let's do it, launch it through the GoGoPool platform. But now I think maybe people are going to have this kind of menu of different ways to launch it, whether they do it that way or launching their own through ACP77 or whatever the case may be. But my question for you is this, Eric, and I don't want to put you on the spot, but just to give people who are builders a rough idea of how much it would cost, right? So like before ACP77, like you said, you'd have to get like 10 validators. Each validator has 2,000 AVAX. So we're talking 20,000 AVAX, which is like $500,000 roughly. That's how much before ACP77, how much you would have to either raise yourself or get people to invest in AVAX to launch their own subnet. But now, like when you envision a post A77 launch, just roughly how much do you think it would cost? Like I've heard some estimates online of like, well, you basically have to pay, some amount of AVAX per year per validator. So I'm just going to throw a number out there. I have no idea if this is right, but like 10 AVAX per validator per year, something like that. I've heard like that's the goal. Like, basically have some amount of AVAX that you have to pay per validator per year, and then you're done. That's all you have to pay. You don't validate the primary network, but you do get the benefit of validating your own subnet and being able to send messages to other chains. Is this kind of the idea? Rough cost? Like, what do you think about that? How should builders be thinking about the cost difference?
Yeah. So because you're doing away with the 2,000 AVAX staking requirement, we've also had questions come up in the vein of, hey, what about value accrual to Avalanche as a token, right? So one thing that I don't think we mentioned yet, but we're instead of if you choose not to validate the primary network, aka stake the 2,000 in a box, then you pay a continuous fee in AVAX to the network. And that fee is going to be, I don't have exact numbers because I don't think we've really announced or even maybe finalized how much that would be. But it's a flat fee up to a certain point. And that point is reached when the total number of validators on the network reaches a certain threshold. So it's not per subnet, but it's rather taking the entire universe of Avalanche validators.
Wait, so I just want to make sure I'm understanding what you're, sorry to interrupt, I just want to make sure I understand what you're saying. So again, this is not set in stone, right? But like, I'm just going to throw numbers out there to make it. So maybe you guys say there's up to having 100,000 validators on Avalanche. Until we get to that point, then any validator who wants to do a subnet only validator will pay a fixed fee. I don't know what it is, but let's just call it 10 AVAX per validator per year. Mm-hmm. And until they reach that threshold, the whole network, not one subnet, until the whole network reaches something like 100,000 validators, you can kind of expect the fee to stay that level, something like that.
Yeah, that's how we're thinking about it right now. And we're going to set the initial threshold like pretty high so that within like the first couple months, years, right, that threshold probably won't be hit. But obviously, if it gets fast adoption, right, then we'll need to maybe adjust certain parameters down the road. And for just for like comparison's sake, like I don't have exact numbers, but Blockworks did do a really good research article on the pricing of subnets pre and post ACP 77 compared to comparable solutions, namely Cosmos zones as well as L2s on Ethereum. The findings were at post ACP 77 to launch a subnet, it will be drastically cheaper than Cosmos zones as well as just typical L2s. And then it's competitive with L2s plus Celestia DA. So that if that gives you like a ballpark. And then obviously there's other infrastructure costs that are more or less a wash, right, between these different solutions.
So I'm thinking about, I actually really like the app chain thesis in general. I think Cosmos is cool, but I think there's a few flaws with it that maybe are going to be fixed under this model. So my view on it is in Cosmos, the value doesn't necessarily accrue to the ecosystem. There's sort of like, there's not value going back to the base gas token or to some sort of like entity that or community that cares about the overall system. So that's one weak point, which I think we're going to be fixing here. There's sort of a limit of number of validators that you can run on any given chain on Cosmos, whereas on Avalanche, I think that's going to be more or less unlimited. I mean, I think you could run something like 10,000 and you would be okay. So you could be fully decentralized. And then there's, I guess, the point you're bringing up now, which is it's going to be also way cheaper. And then I think another point is that I think we're going to approach something where you realistically almost can do a for real one-click launch. So there's been like people posting about that in the past, but like you can if you want to have a very limited sort of subnet, right? But if you want a fully functional one, I don't think that's realistic today. But it seems like once we get past ACP 77 and once Teleporter and AWM and all the messaging sort of apparatus and system gets ironed out and works really, really well, you're going to have this capacity to run the real app chain play and thesis, which I think we've actually never seen in crypto.
Yeah, that's exactly right. And if you go all the way back to the Avalanche white paper, one of the primary goals for Avalanche was to be the best or preferred place to launch your own chain, and that taking all the way back there, right? ACP7 with ACP77 going live, I would say one, we're feature parity with other comparable solutions like Cosmos Zones, but also it realizes kind of the original vision of Avalanche as a network of different blockchains. So for us, we're really excited about that, and we really think like this is like almost like the merge moment, right, if you will, for Avalanche as we head into the coming cycles, years.
I think we've never really seen like the sort of app chain thesis play out, where you can spin up like an L1 really easily, cheaply, decentralized, so on and so on. I think it's a really exciting play. And I think in the market, I don't know if like Avalanche is truly going to be competing with like, let's say Cosmos. I think maybe it's going to be competing with something like OP Stack, with like the sort of like L2 one click, spin up type of platform. And I'm curious how everyone thinks about that, if anyone has opinions on it.
Yeah, good question. Yeah. So I think a few things. I think L2s and L1s are going to be exploding in a major way over the next few years. So I think there's roughly 50 Orbit chains already live, that's Arbitrum's stack. OP has a lot going live. Polygon CDK, those are the three big ones in that regard. There's a lot of L1s going live through Cosmos, and then Avalanche as well as like some that are just their own stack. So I kind of think that over the next couple of years, we're going to have something similar to what we had in the big DeFi wave, where you have this huge explosion of different solutions, and then you end up having some winners. I've kind of wondered if there'll end up being more like crypto M&A this cycle. My guess is that general purpose, there's going to be a small number of L1s and L2s that accrue a lot of the general purpose value. And then we end up with a long tail of highly successful app chains. And then probably a lot of like, failed projects too, which those I think are okay, honestly. Like, I think that's part of experimentation. And, if you go on DeFi Llama and you look at the thousands of DeFi projects, 80% of them have essentially failed, but a lot of them were really good experiments still. So yeah, I think we end up going through this really explosive process over the next year or two. That's a lot of really positive experimentation. My guess is between L1s and L2s, we probably have 1,000 launch in the next 2 years, at least. And then of those, I think there will be some winnowing, which will be really healthy as well. That's my guess.
Yeah, I think choosing between L1s and L2s, like we've had like dozens, if not hundreds, of these conversations as a team. It just really comes down to what's important to you, right? I think a lot of folks choose L2s, especially if you're like, operating within DeFi, because you are instantly able to tap into a pretty large pool of liquidity just within the ETH ecosystem. And then there's also various alignment purposes, let's put it that way. But once L2s get successful enough, the cost that they pay back to the L1, right, being Ethereum mainnet in this case, is going to be something that they have to think about. And as well as, just having their own dedicated block space, right, being fault tolerant to anything that happens on mainnet. And I would say the general conversation across the ecosystem, across different ecosystems, is that once these L2s do become successful enough, they will probably, seriously consider having their own L1. And I think that makes sense, right? They're able to accrue a lot more of the value at the floor level. I think what we're really trying to do here on Avalanche is make it easy as possible to launch these L1s. Cosmos does a pretty good job with their SDK, but anyone who's built in Cosmos before will tell you, right, there's still a ton of custom development work needed, especially if you're building high performant, for specific use cases, right, like high performant trading systems, for instance. Whereas I think on Avalanche, we're going to do more to give people the tools they need. So Ava Cloud, the services arm within Avalabs that services mostly enterprises is one example. Google Pool, another great example, right? Of kind of the vision originally when Google Pool launched. So we're going to try to make it, make the UX for builders on par with probably more of like a Conduit or Contender for launching L2. So that's going to be really the key there.
Just, you reminded me of one additional thought, Eric. I think one other place that L1s shine is a good example is Berachain, which is launching soon. It's EVM identical. And some might have asked, why wasn't it just an L2? And it's like, well, they wanted to do this really unique proof of liquidity sort of modification on the standard proof of stake concept. And so in order to do that, I think they felt like they needed to have more control at the L1 layer. So I think that's a lot of why they ended up as an L1 rather than an L2. That's a little bit of speculation. I haven't asked their team specifically. But that's another place of really interesting experimentation. If you want to do things like that, where you need to have a greater level of control, that would be like a reason why maybe you need to do an L1.
Cool, great conversation. I think in the interest of time, we are going to wrap it up here. Maybe we could do sort of a round of final thoughts. I guess I could share mine by saying I'm really excited to be in the space for the next 6 to 12 months. I think I'm really curious to see how everything plays out, and there's just a lot to be looking forward to. I'm
excited as well. There's a lot cooking behind the scenes, not just in DeFi, but across gaming, institutional teams, with the go-to-market for ACP 77. So for me, having be directly involved in a lot of this, right, which I can't talk about publicly, obviously, but just excited for everything coming up. And we'll try to, communicate, telegraph some of this to you guys. So, because we're, obviously close partners working on a lot of these areas, but there's just a lot coming now through the end of the year into next year. So exciting time for the whole ecosystem.
Quick thought from me. I think that we're kind of at the early ramp, it feels like, of we'll call it next wave of DeFi. DeFi Summer a few years back was the first. But it's been really exciting to see just DeFi as a whole really recovering in TVL. There's a lot of really interesting new kind of, there's a lot of, I'd call it like maturation there, and some really cool new primitives coming. So DeFi is what I've always been obsessed with in crypto. It's still what I think is like the biggest, most important part of crypto, personally. And I think we're kind of at the front end of a big new DeFi wave, which I think is pretty exciting.
To me, like the thing that's really exciting about Avalanche, I mean, I like all of crypto. There's just so much really interesting stuff happening, especially at the app layer. But when you think about Avalanche, right, like ACP 77 is going to make it easier for you to launch your own chain. Firewood, which we didn't talk about, but it's this new way to manage state, which is a big problem in blockchains. And, the Avalabs team is really given it a thoughtful consideration with Firewood, which I think is slated for release, I don't know when, but sometime over the next 6 or 12 months, maybe, I don't know. Teleporter, and it's been rebranded to this new thing called ICTT, which is like an interchain token transfer that allows like messaging from one chain to another. That's really interesting. And then, the work that the engineering team there is doing with HyperSDK, which allows you to be able to basically create your own VM, and with Vrix, which I'm not sure if many listeners have followed that at all, but Vrix is basically showcasing how incredibly fast a VM on Avalanche can be. Like when you combine all of these things, right? Like being able to launch your own chain easily, manage state really well, send messages from one chain to another, create your own custom VM, and make a VM that's incredibly fast. When you have all that flexibility, whatever app ends up taking hold in crypto, like whatever the next 100 or whatever the first 100 million users on chain are going to be, I feel like Avalanche is well positioned as a net to kind of be able to catch that activity whenever it arrives. So, I'm really excited for the state of Avalanche, where it is, where it's going. And I think the next 12 months is going to be really exciting.
Yeah, I think probably one of the main takeaways from this entire conversation has been that Bill is the only person I've seen who's actually been able to say ICTT on the first shot without having to correct himself. So that's awesome. Beyond that, we didn't go too in depth on Boost, which we didn't really need to do, because if anybody is watching and they're curious about Boost, you can go check out the space that we just did with Eric, I think 2 days ago. That will be live on Twitter. We can link that in the description. And yeah, I think that'll round out the episode for today. So this has been a super interesting conversation. Thank you everybody for attending, and thank you for watching.